Chapter 2 homework video. Again, this is Professor Naragon. Go through how to work out the problems for Chapter 2. As you can see right now, I'm in Blackboard. So if you go through Blackboard, all you have to do is click on the links that are down below. So for this one, we want to click on Chapter 2 homework. And I would always suggest to do this starting off at least one time. Then you can go through Connect if you want to. But at least go through one of these links so that it will sync up to Blackboard. Makes it easier for you to see your grades as they post. So once we click there, we're going to get transported to basically the site, and it's going to be right here. This is how yours is going to look. The previous site was my instructor view, but right here, this is going to be where you're going to see. Same thing with when I went through Chapter 1 and showing you both ways. So hit start, and again, we're going to have videos that are going to show exactly how to do some of the questions also. So if you want to take some time, go through those. It's always good to do. So 1, 2, I would probably suggest to go ahead and do those just because it does introduce, again, T-charts or T-accounts and the trial balance, which we'll get into on how to do in just a sec. Big thing here, we start with question number 5. Question number 5 just wants you to kind of know what's an asset, what's a liability, what is equity. So again, assets are anything that we own, liability is anything we owe, and equity is dealing with the owner. So equity's only going to probably have dividends, common stock, and retained earnings. Okay? So since this is only dealing with assets, liabilities, and equity, anytime that we're going to see anything that's like revenue or expense, again, that will fall under the equity category. But you must watch out, because this one right here, again, is unearned revenue. And unearned revenue is, again, anything that we owe the customer that we have not yet performed. They basically paid us a cash advance. So think of this as retainer for a lawyer, consulting fees that an accountant may do. In fact, we have unearned fees right here. So these are services that are yet to be performed but already paid. So since it's like that, and we owe someone, that's definitely a liability. Office supplies. Office supplies for this book will always be an asset. They're kind of like a prepaid. So common stock, the easy one, that's equity. Payable, again, anytime we see payable, keyword in there is pay. We must pay someone. So that will be a liability. Dividends, again, follow on equity. Salaries payable. Furniture. Unearned fees. Then trucks. Now, anything that's basically specific, furniture, trucks, buildings, all of those are known as another type of asset known as fixed assets. So when it actually gives you a name of something we can physically touch and use, like those are going to be automatic assets. Now remember, again, I'm just going to go through these, and I may not do them all because they may repeat, but you need to go ahead and just follow through, take a back look at the notes, even use the ebook, pop up the ebook, see where it goes. So again, you can browse the ebook. It's always good to browse that, just to go back through the chapters. So you can go right back through. You can go find chapter 2. You can do everything. It's awesome. We want to keep always doing that. But again, check my work is always going to be helpful. And again, it will actually show if you got it all correct or you don't have them all. Again, you have unlimited tries with all homework. Okay. Question 6 wants to step it up further. Again, we have assets, liabilities, equity, revenue, and expenses. So we again want to basically identify which one's which. This time we have revenue and expenses. Most of these kind of play out if it's anything that's income related. I earned it, that'll be a revenue. So I may look for keywords right now for earn or revenue. Expenses is going to be the same thing. We're going to be looking basically for expense. It's going to be really simple on that one at times. They don't go too specific on that. Now, also remember, these questions will give you different terms sometimes than the ones you see in these videos because they are random in the way they are. Same thing with the numbers. So do not panic if it's different. Okay, maybe you get lucky and get a lot of the same ones. Good. Move on. It's all fun. Make sure you actually understand. I'm not kidding. Make sure you understand even if you got the same. Okay. So again, we'll go through this. Payable, I know definitely, since I see pay, should be a liability. Interest earned, I see the keyword earned. That is going to be a revenue. Common stock, again, common stock is equity. Even if I just all of a sudden forgot common stock, I can go back to question 5. I noticed I had common stock again, and notice that I got it correct for equity. Sometimes that works too. Okay? Don't lose out on the resources. Accounts payable, again, you see pay, rent revenue. I know immediately, oh, that's a revenue. Supplies expense, right there in the name is an expense. Postage expense. Patents. Now, patents is a new little thing. This is an intangible asset, so it is still an asset. Patents, copyrights, trademarks, those are all going to be assets. And then the last one is a receivable. Anytime we see receivable, again, we take ownership of that. It is considered an asset also. Receivables are assets. So in, check my work, boom, everything's good. Yay! So now we end up with identify the normal balance, debit or credit for each of the following accounts. This one, basically you gotta know what the account type is, and then you can follow what was dealer. If you remember the acronym that I showed in the first video of chapter 2, the note video. And if you don't remember it was DEA. I know I write it with an arrow, just kind of, but DEA stands for dividends, expenses, and assets. They are all naturally debit, or normally debit. LER stands for liabilities, equity, and revenue. Those are normally credited. So for those, we just have to classify and then follow the DEA pattern. And again, if you notice how dealer is spelled, first 3 are on the left, Last three are on the right, just how it is on a T-chart. Debits are on the left, credits are on the right. So, dividends. Boom, that's just one of the acronyms already in dealer. So we know it's basically going to be a debit because that's an acronym. Prepaid rent. Anytime we have prepaid, that is naturally an asset. So since it's an asset, it's part of the DEA, that will be a debit. Common stock. Common stock, as we saw from the last two questions, that is equity. That's in our LER. So that's on the right side, which means it's going to be credit. Here's another prepaid. Avoid falling in the trap of the fees because it's, again, prepaid. So since it's prepaid, that follows the prepaid rent and the asset. Utilities payable. Again, we see payable. So that's a liability, and it's going to be naturally credited because it's part of LER. Prepaid parking. I like it when they give you a lot of the same ones, same key thing. So as we see with taxes payable. And then now we got supplies. Supplies, like office supplies, it is going to be an asset. So we are going to debit it. And then last one is interest payable. So again, check my work. Boom, there we go. So, alright, number 8. It wants to indicate which or whether a debit or a credit decreases. So watch out with number 8. It's all about decreasing of the normal balance. So it's going to be the exact opposite now. So anything that follows under DEA to decrease, it's going to be the opposite. Same thing with LER. So to decrease DEA accounts, it's going to be a credit. So dividends, expenses, and assets. And LER, liabilities, equity, and revenue, will be debited. So prepaid rent, of course, was an asset. And since we're decreasing it, it's going to be a credit instead of a debit. Here's another prepaid. Again, I love it when Connect likes to give out multiple of the same keywords. Office supplies, that's an asset, so that decreases by a credit. Furniture, that's another asset. Office equipment. Ooh, I hit a lot of fixed assets in this one. So all these that are so specific to like land that I can physically touch, factory, that's my building, trucks, vehicles, office equipment, furniture. All of these right here is a type of asset known as fixed assets. And it almost hits every different category on that one. So anything that's more specific, that is going to be a credit. Next parts, all four of these are all payables. Since they're all payables, they're all liabilities. And to decrease those, we must put a debit in. Woo, lots of fun debits. And boom. So the big thing here with 8 to not get confused on is that decreased word. Okay? So watch out for that. Okay, so question number 9. Again, we're just identifying what needs to be done, either a debit or credit, to this time increase or decrease. So a lot of these, we can probably go back to 8, 7, if we need to, 8 or 7. Remember, this one is actually an increase. And then this one's the decrease. So if we find either one, we should already know. But again, we're going to go here. So this one is to increase a prepaid parking. Well, since it's increasing a prepaid, and prepaids are assets. To increase, we must debit. To decrease supplies, again, if I want to go here, I notice I see a supplies account right here. I'm decreasing, credit. Usually that does help a lot. So I want to hit credit. To increase janitorial expenses. So to increase an expense, that's its normal balance. So it's going to be a debit. To increase haircutting revenue, again, keywords revenue. Since it's revenue, it must be credit to increase. Here's a payable. We're going to decrease the payable. So to decrease payables, again, it's debits. To decrease office supplies, that must be a credit. Supplies accounts are the same, both assets. To increase unearned subscriptions, keyword unearned. So in order to increase those, they are a liability, which means they get credited. Fun stuff. To decrease land, that's a credit because that's an asset. And to increase common stock, that will be a credit, equity. And to increase office equipment will be a debit. So far, not too bad. These are the first few questions are simple. We haven't gotten to the trial balance yet, but it's probably coming. Better watch out. Better not cry. So, I'll tell you why. Here we go. So, remember, chapter 2 was big on the journal entries. Here comes the journal entries again. So we must analyze what's happening in the transaction and to what we need to do. So, starting off, Connect will have these transactions up here. But the cool thing is, if I don't want to look at these, I can have these right here. So right here, it shows the same thing that's right here, just a little bit bigger. So we have Madison Harris, the owner, invests $5,500 cash and $23,650 of photograph equipment in the company in exchange for common stock. Alright, let's see if we can find accounts. First, we find cash. We know it's part of the 5,500. We have the 23,650. That's part of photography equipment. And we see that it's going to be exchanged for common stock. Cool. So, since all these accounts are increasing, we're taking ownership of the cash as a business. We're taking ownership of the photography equipment. And then the owner, we're going to owe the owner the total in common stock. So, start again with our debits. We're going to start with cash. And it's going to be easier just to type it out till it pops up. So photography equipment and common stock. Notice again that Connect wants debits before credits. So always put your debit accounts first. So we have 550 and 23,650. So notice here, our only two amounts are both increased to debit. It does not give us our credit. So we must put this in balance. Best way, add these two, and that will be how much your common stock is. So these two together, looks like it's going to be 29, 150. So with that, this is our journal entry for now. We can actually go check my work again, and it will actually pop out that everything's good. But watch out for this. When you hit check my work on these kind of transactions and you return, notice that it doesn't have the gray box or anything. you must hit this X to go back. Okay? Once you hit the X, it'll go right back to how you can record. Okay? So let's go to question 2. Company paid $2,200 cash for an insurance policy covering the next 24 months. Again, anytime we pay for anything that's for extended periods of time, this is known as a prepaid because we haven't truly used all the insurance. So this is going to be one of those big adjustment entries that's in chapter 3 that we'll get into. So we're going to need to go for prepaid. So it's going to be prepaid insurance because this is an insurance policy. And it's going to deal with cash. There are only 2 accounts if we look at it. Because basically I exchange cash for the policy. So I'm losing the cash. I lost the ownership of the cash, but I gain ownership of the insurance policy. So again, if you can only figure out how cash is affected, 1, I'm losing cash. So if I'm losing cash, it's naturally a credit. So what other account that we have, that has to be my debit account. So now we got prepaid insurance and we got cash of $2,200. Again, we can check through all these. I'm going to wait till the end and I'll show you that we can check them all at once. So question number 3. The company purchased office supplies for $1,045 in cash. Okay, again, we're seeing cash is flowing out. It's paying for something. We lost ownership in cash, but we gain ownership of office supplies. Because office supplies, again, is a physical item. We can really gain ownership of it. So, office supplies, cash, and again, 1045, 1045, boom. Oh, cash did not go in. Cash. There we go. So always watch out for connect not putting the entry in or something like that. Do not hit clear entry. Okay? You don't have to hit record entry either. You're pretty much good. Okay? Number 4 for 10. Number 4 states that the company received $3,700 cash in photography fees earned. Look at that keyword, earned. So we know this is a revenue account. So how do revenue accounts increase? They increase by a credit. Cash is also increasing because we received cash. So we know cash is increasing, we're taking ownership of the cash. So since cash increases by debit, that'll be my first account. And then we're going to use photography fees earned because that's my other account. And then just fill in the numbers, debit, the cash to show the increase of cash, and then credit the revenue to show an increase of revenue. We have now done the revenue recognition principle. Yay! We have recognized the revenue. Notice that the dates are already filled in for you. You don't have to worry about those. So, but be wary on any other item to always fill in the dates to whenever the transaction happens. So, last one. The company paid $879 cash for August utilities. Alright, so if you have to picture this, this is just paying a bill. So we lost ownership of cash. So we know cash is gone. So it's going to be credited. So we got to figure out the debit. We know it's going to be utilities. But since we've paid this bill, it is going to be utilities expense. Now if we just had the bill, that'll be utilities payable. So since we paid it, and Good thing is, Connect's only got one utilities expense. And then put in our number. For me, it's $8.79. Boom. Now I can go check my work for the whole thing. And there they all are, all at once. Instead of doing one by one, you can do it all together. It will actually show you which ones are X's. So if I found out that the third one had an X, I can return the question, hit the X, and go right to the third one. It's a cool thing to actually look at. So now we are hitting our big problems. Hey, last few. Okay. So here we go. Question 11. This one's giving us a T-chart, and we must figure out how much we're going to have. So again, with T-charts, we must look at each side, and we must either add or subtract based on their actual numbers that they have, who they are, and the classifications. So give me one sec. So for instance, with cash, we know cash itself is increased by debit, decreased by credits. So when we do the math, we must add in all of our debits and then subtract it by all our credits. Same thing on this side. We have credits and we have debits. And once we fill out that number, we actually fill it in to which side is greater. So best thing is always look at which side is end up greater. I can probably tell this is probably going to be debits. This one's definitely credits. This one looks still on debit side. And this one is a little bit other. Notice that there's another cash account. Don't combine these two. They tend to do that every now and then with Connect. So again, with the capturing program I'm using, I can't really put a calculator right here and show. So I actually opened up another link. We should actually see it. So right here, we'll start out with that first cash account. We had 180 plus 380 plus 100. So my debit side was 660. And then on my credit, I had 130 plus 140. So on the credit side, I have 270. So with the T-chart, to get our ending balance, first off, you can tell which side is greater. Debit side is greater than the credit side. So we're going to take the 660 minus 270. Enter. So my cash for this one should be 390 bucks. Oh, I added an extra one. So again, we're going to have it on the side that's greater. Here, debits is greater, so there's still a debit balance. Our credits are totally gone. They're technically zero. We leave it as a blank. Okay. Next one, accounts payable. So with accounts payable, we know, again, this is a natural credit, and it's pretty obvious which side overrules. So go back to our calculator. I want to clear this out. We're going to just go ahead and add the debits. So our debits are 6,900. Now remember, accounts payable decreases by debits. So this is technically a negative number to us. So we just want to take the positive, which way it increases. So since it increases by credit, we want to take the 10,400 and subtract out the 6,900. So we have 3,500 left in accounts payable. So when we do these, basically the T accounts will tell us if something's up. If it's not in its natural balance, we may want to double check it. So like if accounts payable, this was switched and debits were the greater number, which means here on our ending balance, this would have been the greater. That tells me I either paid a bill ahead of time, so I've already paid all my bills, I paid a little bit extra, so I actually have a little bit of an extra money that I paid in. So, or I made an error. Sometimes that happens. Sometimes numbers get switched. This is a good way to see. Again, accountants are going to use these T charts or T accounts to reference back to the journal entries. Because again, we could switch numbers between the two. So let's keep going. Let's knock out supplies. Again, supplies is a natural debit. So this is going to be subtracted from this. Accounts receivable, same thing, natural debit. So it's going to be subtracted from our credits are going to subtract from our debits, and so forth and so on. So let's do supplies. Clear R. So 10,800 plus 1,900 equals to 12,700. Then all we do is take that 12,700 minus the 4,600 credit. We should have 8,100. Again, always put it on the greater side. Here, accounts receivable, we have 230 plus 230 plus 230 plus 180. So for our credits, it's a total of 870. We only had one item that was on its normal side, its normal debit for accounts receivable. So we subtract out its credits. You should have 130. Now, wages payable. Look what happened to this one. It has 780 on the debit side, 780 on the credit side. These two basically cancel out. When they cancel out here in Connect, you need to put a 0 in its normal balance. Since this is payable, its normal balance is on the right side of credit. So put a 0 there, and you should be fine with that. Last account that we have is a big old cash one. Again, it has numbers on both sides. So let's start off with the debit. So we have 14,460 debit. And we have 14,200 of credit. So again, it increases by debit, so that's going to be my positive number. It decreases by credit, so that's going to be my negative number. And it shows that I'm going to have 260 still left as a debit. Again, check my work. Boom. There we go. Always check your work. Again, if you're getting any confusion going on here, you can always send me an email. If you send me an email for any question though, please send screenshots. It makes life easier for both of us. Okay? Now, question 12. As you can see, question 12 has 3 parts going on right here. We have analyze, we have the general journal, so we get journalize, and then we get T accounts. Yay on both ends. So, let's start off. We're going to analyze A, B, C, and D and see what's going on. First off, we have on May 15th, Deshaun Tyler opens a landscaping company called Elegant Lawns. And to be honest, I've actually heard of that company before. So maybe this is their real company and he's the real owner. We invested $71,000 in cash along with equipment having a $31,000 value. So with this, that says we have assets and we have liability or equity going on there. Common stock again, equity. So two assets. First off, we have cash and then we have equipment. So we must add these two together. If we add those two, that's easily $102,000. Since they're both assets, missed a zero. So it'd be $102,000 on this side, and then since it's equity, we put the same amount. So watch out on that to make sure you actually add those. Do not try and put plus right here and then total equity. Again, both sides must balance. On B, Elegant Lawns purchase office supplies on credit. Watch out on credit, because on credit means we paid using probably a credit card. So we owe the credit card company $300. So since we owe, we know we're going to have to pay that back. So we're going to have to pay back the $300. What did we buy with $300? Is supplies. And again, supplies are an asset. So $300. Okay. C, Elegant Lawns received $7,900 in cash for performing landscaping services. So again, we received money. So we know assets are going up by $7,900 since that's the only asset account I see. We know services. This is again revenue. I do not see revenue here. Revenue again is part of equity. So that we'll get $7,900 there. And the last part, D, we received $1,100 cash in advance for providing landscape services. So again, we did receive cash. So we know assets are going up. But we received it in advance. So again, putting that deposit down for a service we have yet to do. So since we haven't done it, this again is unearned revenue. And since unearned revenue is considered a liability, we're going to put the $1,100 right there. So again, check my work with these. I would strongly encourage to do check my work with all of them just to keep things balanced. But I'm going to show you what you probably need to do with the general journal and the T accounts, what I couldn't really show you on the notes. So, turn to question. Let's hit to the general journal. Okay. Again, cool thing with Connect, it shows the actual transaction right here, so you don't have to keep going up and down. So, on May 15th, Deshaun Tyler again opens his landscape business. We already know this. We already know from analyzing how much we should have. But remember, we have two accounts that are assets. One was the cash, and the other one was equipment. So again, we put in our 71,000. We put in our 31,000. And lastly, we always traded in for common stock because it's the owner investing into the company, so they get stock for it of the 102,000. from here, this is what I want you to do. Once you put this in, again, you can check my work to make sure it's correct. Boom. Return to question. Once you put this in, I would strongly encourage to go to the T account and immediately put this into the T account. So I can go right here. I saw cash. Cash is a debit. T account. On May 15th, we had cash 71,000. So right here, here's my debit, here's my credit. Notice I have to put in the dates, depending on if it's credit or debit, as they will have drop-down menus on both sides. So I'll put 71,000. Next, I'll move on to the next basically account, which is equipment of 31,000. So here's equipment. It was a debit in that transaction. Put 31,000. Go back, see if I have another one. Common stock of 102,000. So T account, common stock of 102,000. Okay. What you want to do is actually do this for each journal entry. This way you don't miss an account on your T chart. Okay. So your T accounts, it'll help out on that. I mean, if you do want to wait and put in all the transactions, you can probably take a picture and just go down the list. Same thing works, but I just like it that way because then you can actually go from here and immediately put in a T account like it's really supposed to be done in the real world. Okay, so again, we got office supplies for credit. So office supplies, it's on credit. So accounts payable for 300. Okay, so I got two accounts, and of course it's going to pop up this, so you want to hit OK. So office supplies, this was on the 21st of 300. Then we have accounts payable of 300. Cool. On the road again. So again, it is going to save them as complete journal entries. So you can wait till you got all 4 journal entries in, then take a picture with your phone, and then go through the T accounts and just list them out. Again, I like this because this is how accounts really do work, because these happen on different dates. We don't normally get the whole month. We actually have to do all this all at once. So here we go. We performed the service, got the cash, and let's see if it's just under a landscape. Yep, landscape revenue, 7,900. Go to T accounts. So again, cash. We receive the 7,900. Again, Nose Connect is already doing the math for you, so you don't have to really worry too much about that. Here, we see on the 25th, needs to go over here, 7,900. And then go to journal entry. And now let's finish off this question with the cash advance. So again, we received cash and naturally goes up. We took ownership of cash. We did not perform the service yet, so find our unearned right there. So again, we try and do common sense here. With unearned revenue, it really is, have we earned that money that we received? No, we haven't for that service, so we owe it to our customer until we actually earn it. So again, T accounts, we'll have cash on the 30th, of the 1100. Yep. And then unearned on the 30th of 1100. So check my work. Boom. Again, watch out on the dates. That's the most part that basically gets everybody. So remember, the date goes on with the side that's you actually credit or debit. So everything is correct. Yep. We are good to go. We're going to move on to question 13. And I do know these videos do run, but to properly explain everything, to help y'all out, you gotta give me some credit, okay? So, this one, 13, is basically 12 all over again. We're going to have the general journals, and then we're going to have the T accounts. So again, we can go through all of these and so forth. So, again, this time we exchanged cash for just the common stock. We don't have any equipment going on here by Casey Spade. So, again, same journal entry that you notice that we do with all of our transactions is go through, put in our money, boom. Now I'm going to go through the whole journal entries first, and then we're going to post them all to the T accounts. So 2, company purchase office supplies for cash. Again, it's for cash. We'll lose in cash. So I immediately know that's my credit. We know office supplies. There would be my debit. So 355. 355. Boom. 3. Alright. So, company purchased 6,774 of office equipment on credit. On credit. So that means, again, the credit card got used. So we know we actually have to pay somebody. Usually this is going to be accounts payable, since it's nothing really specific to a loan or anything. So we know accounts payable is usually a credit. We took ownership of the office equipment because of that payable. So office equipment up 6774. 6774. Sweet. Yay, bought some equipment. Oop. Oh no, I think I did a boo-boo. We're good. I just gotta put that one back in. So watch out about hitting cancel. Cancel will actually clear out the last one that you did. So, again, office equipment, accounts payable, 674, 674, and move the 4. So the company receives 1,445 cash as fees for services provided to a customer. So again, we provided a service, we got money for it, so money's going up, it's going into our bank account, we get an increase, we love it. Why did we get it? Well, we got for fees earned. Boom. 5. Company paid 6,774 cash to settle the payable for the office equipment. Notice it's purchase and transaction C. So we did pay out cash. So we know cash is going down. Since this was part of our liability, we must do accounts payable. And put in 6774. 6774. Because basically right here with number 3, notice that we put what we supposed to pay for office equipment into accounts payable because we owe them. We just paid our bill. That's basically all that's going on. We paid our bill, and when everything's done and said. 6, company billed. So we billed a customer for $2,597 as fees for services provided. Now, since we billed a customer, we have not received cash. We have not received anything yet. So for F, since we did not receive anything, but we are planning to, and we billed a client, this is known as accounts receivable. So that's going to be my debit. Basically, it takes in place of cash if we're not receiving cash right away. Again, why did we bill the customer? We billed it because we provided some fees. So fees earned, so 2597, 2597, boom, go to 7. Alright, so the company paid $530 cash for monthly rent. So again, we paid cash. So cash is going to be our credit. So we lost ownership of cash. Why did we lose ownership? Well, we had to pay our rent bill. So since we didn't receive any bill before then, it is rent expense. So notice that the only time we are actually using accounts payable is when it mentions we bought something on credit. So just be wary of that. So expenses are naturally debited. Again, cash is going down, so we must credit. 8. Company collects $1,091 cash as partial payment for the account receivable created in transaction F. So customer paid. Yay! How they paid? Well, they paid by cash. So we're going to deposit the cash. Means cash increases in our bank account. The 1091. It came from the customer, so accounts receivable must go down by 1091 or basically get credited. Okay? Because again, customer paid their bill to us. So now we received money, we lower the amount that they owe us. Question 9, last part. The company paid $1,200 cash in dividends to the owner. So, since we paid cash, again, I know it sounds like a broken record, but trust me, the average mind has to think of this almost like 28 times before it goes into long-term memory. So the more you kind of repeat over how cash is affected, the more better off you're going to be. Now, since this is for dividends, we can find dividends and put 1200 and 1200. Cool. So there we go. There is everything for the general journal. So we can hit check my work, verify everything is correct. Everything is indeed correct. So what you would love to do is simple as this. Once you've done this and you verified all these correct, remember we have to put these in our T account. So what you probably want to do is go ahead and take a picture of the general journal. And when you do that, you can then go off of that picture instead of going back and forth and do required to. So again, we must return to the question, exit out of that, go required to. Okay, so now we're in the same scenario. So start off with transaction A and then move through each one. So transaction A. So again, we have these. Remember to put it on the side that's debit and credit. This was our cash and common stock of the $12,250. Ooh, so Connect has changed it up. Notice there is no drop down. So watch out for this. Sometimes Connect wants to do this. They like to change it up on us on how they do their T-charts. Be wary of this. Notice that the drop down menu is right here. So they're saying this is debit. Right here's our drop down menu, and this is going to be our credit. So always watch out on that. Sometimes they do the format a little bit different between the questions. That's why we have these videos, just to prepare you as I go through. So office supplies is my next one. That was B 355. Why we do it? Well, we had to do it for cash. So B 355. So again, it is going to change the numbers right here depending on which side is greater. So as you saw, it took the 12,250 minus the 355 to come to the 11,895. Next one, we have office equipment and accounts payable. So office equipment, C. And again, be prepared, you will have blanks. So do not get scared, do not try and fill them in. They are pretty much normal that the blanks will happen. And notice I'm just going down the list. So D was our cash. So for this, you can go basically down each one. You're going to run out of space if you don't. So make sure you do that. I'm just so used to doing that. So I'm going to move up this credit up here. Get rid of this, just in case I need more space. So D, cash, 1445. And we did it for fees earned. Find fees earned. Here they are. Credit. For D, of the same thing. Now, I'm not due to time, really, unless you really want to see me input all of these. This is basically all we're going to be doing. So finish up the rest of this question by just filling in the rest of the T-chart. Again, take a picture after you do the journal entries, verify that they're correct, and you should be good to go with the T account. Just go down each one. As you can see, A, D are right here with the cash. If we have differences, like here with accounts payable, I know that's my E is 6774 also. Notice that it goes down to 0, and that was cash that was drawn out. So again, so just keep doing that, just follow down the list. Again, if you have a problem, make a screenshot and I'll be glad to explain a little bit more. But the key thing is just basically match up to exactly what you have on the general journal. Alright. Question 14. This is the big problem. So this is the big problem of the homework. So again, we're going to kind of go through the journal entries. And again, we're looking at T-charts. Again, this is a little bit different. Notice how Connect now has it basically more fleshed out. It's now got dates, debits, credits, and it's going to pop out with a balance on this side now instead of down here. There's many ways to do T accounts. They're showing you 3 ways right here, but basically the most common one was the original, where it just pops up the total at the bottom. Okay, and then require 3 is our actual trial balance. So what we're going to do is we're going to run through this one as quickly as possible. So, but of course, if you need to, you can always pause the video and go take a break and then come back and rework it. Remember, you have a limited tries on these. So let's start off. Some of these you probably are going to already fill in and not even need the video. So that's a good thing. We're going to just keep going. So first one, Tanner, he's going to invest 130,000 cash along with office equipment valued at $31,200 in the company. Notice I is missing. The company in exchange for common stock. So again, we're going to have cash. We're going to have office equipment. And we're going to have common stock. So, just like a repeat from the previous problems, if you need to go back to those, you're more than welcome to, and just see how they worked, especially with this journal entry. So again, add these two together. That'll be my common stock. Let's move to number 2. See if they throw anything more different. Alright. So, the company prepaid. So we prepaid again for 12 months of rent for office space. So again, we paid out cash. So cash. We know this is credited. Makes life easy. We can fill in the debit. Figure out that ours says prepaid. So we want to see prepaid. We have 2 accounts. Which transaction is it working with? This one's actually working with rent. So we're going to deal with rent. And that's it for that one. 3. Company made credit purchases for $15,600 in office equipment and $3,120 in office supplies. So, what did we take ownership of on these 2? Well, we have office equipment we took ownership of, so it increased by $15,600. We took office supplies, also increased by $3,120, and it said that it was made on credit. So since it's made on credit, that will be accounts payable, and it's going to again be the total of these 2, which looks like a grand total of $18,720. So again, watch out on these that actually bring in multiple numbers. If I see 2 numbers, most likely starting off for these first few chapters, they're both going to be on the same side. They just want me to add. Okay. Question 4. The company completes services for a client and immediately receives $2,000. So since we immediately received, we actually have some revenue going in. So cash is going up because we're going to deposit that in our bank account of $2,000. It ends up being for revenue. If I see services revenue, bet that the account. One more 0, and there we go. Notice that I am going a little bit fast because you can pause, you can go back and rewind. So, but if I'm going too fast, please let me know. Start sending me emails so I can slow down if need to be. Okay. The company completes a $10,400 project for a client who must pay within 30 days. Okay, so we've completed a project, but we have not been paid. They have 30 days. So since we've completed, we did earn our revenue. So we did earn our revenue. Since we've billed the customer, this is accounts receivable. The customer still owes us money. So we own that receivable or that bill until the customer pays. So 10,400, 10,400, and now move to 6. Company paid $18,720 cash to settle the account payable created on April 3rd. Yay! So right here, this was April 3rd. So one thing here, if I want to double check my math, say I did not hit check my work yet, I can double check it because there it is, $18,720 to settle. Settle basically means pay it all off. So again, cash got hit by $18,700. We lost that amount. We lost the ownership. but we paid our bill. Since our bill is in accounts receivable, accounts payable, we just put that as a debit. We decrease accounts payable. So both accounts types get decreased in those transactions. 7. The company paid $6,000 cash for a premium on a 12-month insurance policy. So again, we paid for an insurance policy that we have yet to expense. So anything that deals with a long-term time, again, is prepaid. So it's prepaid insurance, and since it's an asset, and since we're taking ownership of that premium, that is going to be our debit account. We know cash is going down since we paid cash. And just input the number. Do not input 12. I do see people do that, so don't do that. Just put in the actual cash amount. Alright, 8. The company receives $8,320 cash as partial payment for the work completed on April 9th. Since we're receiving cash for work completed and it was a bill, again, we can go back to that one, actually see it. But since it's a bill and they paid on it, we know our accounts receivable with that client, they owe us less money now. So we must decrease their account receivable or their account to us. But we get to increase cash. We got to make a deposit. Yay! Made a deposit. So $8,320, $8,320. Boom. Now we can go on to the next one. So 9. The company completed work for another client for $2,640 on credit. Alright. So the company completed work for another client and it's on credit. Again, we have the keyword on credit, which means accounts receivable is being hit again. Again, we actually earned it for revenue. So 2640, 2640. Now, we're not going specific with clients yet on accounts receivable because this is going to be a later chapter. I believe this is chapter 7. So this is going to be in that chapter. 10. The company paid $6,200 cash in dividends. So again, since dividends is naturally debited to increase it, and we know cash is going down because we paid it out, we credit our cash and we debit our dividends. We are almost done with the journal entries. Yay! The company purchased $1,040 of additional office supplies on credit. Okay, so we created our bill, we paid it on a credit card. So we know office supplies is increasing. We took a ownership of additional $1,040. We created ourselves a bill. Now, in some circles, when we do these and they are actually a credit card, you can actually have an account that says credit card. Most big companies, they're going to like to do that just to separate out who's been buying all this stuff. Alright, so the company paid $700 cash for this month's utility bill. So since it's utilities, it's pretty much going to be an expense. How we paid it? By cash. So cash is going down. Utility, 700. Cash means go out by 700. Woo! So that's all of our journal entries. Again, check our work. There they all are. Now as you can see, it's going to be hard to actually take multiple pictures. Take one picture. So you're going to have to take multiple pictures. So again, use your handy dandy phone. And we're going to make sure to get everything And now, because we got the trial balance, I would like to go through the trial balance. I'm actually going to go through all these and start posting them into Require 2. So, return a question. And I'm going to do this kind of fast. So, just follow along with it. Again, you want to go based on your picture, all your transactions. So, you're going to put in your date. This time, we don't have to worry about putting dates on the credit side. It's just one date. And you're going to put in the cash, or whatever the amount is, in the right spot. So basically, we're going to mimic, again, what our journal entries are. So, there we go. So again, very quick, very fast. Try and knock out all these as soon as possible. And you're going to notice, once we finally add another number, again, for connect, they're going to do the balance right over here. This is going to be important. So, we want to make sure we keep a close eye on it. So, April 3rd. Office supplies on April 3rd. And then April 6th. We have cash. So I do know this is taking a while, so if you want to like pause the video, do it yourself, or just skip ahead, you're more than welcome to. Nice. Oh, we're already here. 8, 9. So again, like I said, it's best to, you can do the journal entries first and actually have them all in, and then go back and actually put them into the T-charts. Works the same. You can go back and forth between the two. You can do that also. When you do that, just make sure to double check that you got them all in, because Connect has this little thing that they ain't going to tell you. They're just going to say it's not complete. So you will have to double check. So when it does that and says it's not complete, you want to make sure that you actually go back, check your numbers. But the only way you're going to actually have that is when you fill out all three and then notice that it says not complete. Cool thing is, if you put everything in the trial balance, when you do that, it should actually pop out that one of the numbers is wrong, and you can actually go back and fix it. Prepaid insurance. So if you go back too fast, you may miss an entry, so always make sure that you got the right dates, that you're following it through. And again, notice that right now we're still more focused on cash, because cash is king. So basically really look at how cash is increasing and decreasing what causes these to increase and decrease. Alright, we're almost done. So we did pretty good on revenue. So all three are in. Notice that's 15,040. So we didn't do too bad. We only had one expense. So really not bad if you want to do revenue expense. So last three entries, cash on the 28th. 620. Then dividends on 28th of 6,200. Office supplies on accounts payable. So again, notice that some of the ones they have blanks, while others we actually filled out everything for them. So do not fret if it does have blanks. It's okay, because you actually did all of your journal entries. If you go back and actually check and notice that you didn't have one, just go ahead and put it in. And last one, utilities expense. But I would definitely look to make sure you have all those dates in. So if I can trace all those dates, I should actually have all my accounts in. If I can't, then I know I've got a problem. Okay, so here they all are. They're all in. We want to check my work. So, up. We notice, see, this is a good way. Notice that I've accidentally put one in wrong as I was going through. I put the 6th wrong, so I can go back here, and it's just forgot 0. Sometimes that happens. Y'all probably already looked at it on the video if you were watching and go, oh my god, he missed a 0. So, good job if you saw that. Here, all I have to do is put in back into 2000. Boom. So, 1001, 500. Again, check my work just to be safe. Boom. Everything's good. We can move on. So we're going to move on to required 3, which is the trial balance. Now, if I end up keeping this 200 by accident, and I put in what I'm about to do with trial balance before I hit check my work, it will actually pop out unbalanced. So, I can actually show you if that happens. So, right here on the trial balance, now that we have everything balanced out, and instead of taking a picture, it's probably just easier just go back and forth real quick. We're going to go down and basically go, notice these numbers? We're going to just go increase. So cash, accounts receivable, office supplies, prepaid, and keep going as the numbers increase. So, again, first account is cash. And you can mostly go down just by this list too, if you want to do it that way. So accounts receivable, office supplies, prepaid insurance, prepaid rent. So this is the cool thing about Connect. Again, remember trial balances, if you have to make one, it's always assets first, then liabilities, then equity. So common stock dividends, next will be revenue, and then expenses. So all these accounts are going to be used, and then just flow with it. Basically, when you have T-charts and you put out the T-charts correctly, you can just go down the list of the T-charts and put them in the trial balance. They should all be in the same order. So with the trial balance, because we're going to be doing these quite often, chapter 3 is going to have 2 of them coming at you. We're going to start off by looking here. I'm going to look at this balance. This is 101,500. 101,500. Alright, so why did I put it as debit? I mean, the reason why this number is positive. Yeah, it is positive. That means it's in its normal state. This was negative. That means we actually probably did a mistake if this is cash, or we actually paid out more than our bank can actually hold. So we have basically something bad going on. We withdrew more than what we had. But since this is positive, you go with the normal balance of the account. So all assets, again, are debits. So, again, 4720, 4720. Office supplies, we have 4160. So again, all these should be positive. If you have a negative, you may need to double check things. And again, connect is adding them down at the bottom. You don't have to do that part, which is good. So 7,200 for our rent. 46,800 for office equipment. Accounts payable ends up being at 1,040. Now remember, accounts payable, it's a positive number, but our credits, it's a natural credit account. So a lot of this you have to remember it's normal balance. So common stock 161,200. 161,200. So right now we still know that they're not in balance. So keep going. Put in our dividends of 6,200. So this is really a way to actually double check things are kind of correct. Again, a trial balance does not guarantee that. We can have mistakes. It's just one that kind of helps curb the mistakes. All there is basically finding out if we put it in the right amount. So if they balance, everything's good. If they don't balance, something's wrong. So here they all are. This is all using my numbers. Again, your numbers are going to change. So don't expect to have the same numbers. So 177,280 for debits. Have exactly the same thing on credits. Everything's good. Now, take for instance, say I kept that 200. So if I kept that 200, cash would actually be off by 1,500. So again, to verify, say I left that 200 in, I didn't check my work. It says now the balance is 99,700. So I would have put 99,700. Notice now everything's in. I did it to what the balances say, but it's not in balance down here. So that would flag that something's wrong. I probably would hit check my work to help me out, or I would just go back through, verify which ones real quick, and actually find my mistake. Usually with accounting, I would strongly suggest to do this. If somehow this does not balance, instead of hitting check my work, you may want to just go double check yourself. Get used to that, because in accounting, in the real world, we don't have that good old check my work. And in the project, you don't have it either. So you may want to practice with it already. Okay? So, end it all. Final check. Boom. Everything everything's good, good, good. It actually says answer is complete and correct. We are all done. And that is chapter 2. That is completely chapter 2 homework right there. Again, if you have questions, let me know. And I will see you for the next video.